Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Enterprise Financial Services CORP quarterly report. Enterprise Financial Services Corp offers a wide range of financial services to individuals and corporate customers across 7 states. The company's services include banking products, checking, savings, money market accounts, certificates of deposit loan products, plus commercial and industrial loans, plus commercial real estate loans, plus real estate construction and development loans, plus residential real estate loans, plus small business administration loans, plus consumer loans treasury management services, cash management, international trade, tax credit brokerage wealth management services, fiduciary, investment management, financial advisory, online banking services, online banking, mobile banking, remote deposit capture, internet banking card services and tax credit businesses other specialized services, plus life insurance premium and sponsor finance, plus tax credit-related lending, plus community associations, property management, legal industry, and escrow services, plus customized solutions and products. The Enterprise Financial Services Corp. EFSC stock price has remained relatively stable over the past year, experiencing only a slight decrease of 2.11%. This stability can be attributed to a combination of balanced financial performance and broader regional banking sector trends. Several factors have contributed to EFSC's measured movement, including a mixed Q3 2025 earnings report, which missed analyst expectations but saw revenue surpass estimates. The company also increased its quarterly dividend by $0.01 per share, signaling management's confidence in the company's financial health. Additionally, the regional banking sector experienced a favorable operating environment in late 2024 and heading into 2025, characterized by a steepening yield curve, improving loan conditions, easing regulatory pressures, and ongoing merger and acquisition momentum. This general stability within the sector has contributed to EFSC's relative stability. However, factors such as an EPS miss, higher credit loss provisions, and a one-time tax credit recapture in Q3 2025 have counteracted some of these positive developments, preventing any significant long-term shifts in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized into 3 main categories: net interest income, non-interest income, and loans. Net interest income has increased due to higher average balances in loan and securities portfolios, lower short-term interest rates, and an increase in total loans. This is a significant driver of revenue growth, accounting for $36.8 million. Non-interest income has also seen substantial growth, with a 136% increase in the linked quarter and a 79% increase year-to-date period. This can be attributed to increases in tax credit income, BOLI income, gain on SBA loan sales, and other investments. Loans have been a key driver of revenue growth, particularly those to borrowers with strong earnings and sound financial condition, grades 1, 2, and 3. On the other hand, revenue decline has been driven by decreases in non-interest income due to lower anticipated insurance proceeds from the linked quarter. Net income and profit margins underwent significant changes between 2024 and 2025. Notably, net income decreased by 10.7% over 3 months, but increased by 7.4% over 9 months. This mixed trend suggests a complex underlying dynamic. Profit margins also showed contrasting trends. The net interest income margin declined from 72.1% to 69.6%, while the non-interest income margin rose from 10.3% to 21.4%. Conversely, the operating profit margin increased from 11.2% to 12.7%. The reasons behind these changes are not explicitly stated in the provided information, leaving room for speculation and further analysis. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash flow of $150,673 in 2025, the company demonstrates a healthy and sustainable financial position. This positive trend suggests that the business is capable of covering its expenses and investing in growth initiatives without relying on external funding. The company's debt level and interest expenses have undergone notable changes. The total debt has increased by 23.3% from $2,791,462 to $3,433,510 over the past year. This growth is largely driven by a significant increase in FHLB advances from $0 to $327,000. On the other hand, interest expenses have decreased by $16,000 and $82,000 for the 9 months ended September 30, 2025 compared to the same period in 2024. This decrease in interest expenses has contributed to an increase in net interest income of $38.9 million over the same period. Management is optimistic about the company's financial outlook, citing an increase in tax-equivalent interest income due to higher loan and securities balances, as well as a higher yield on securities. They are focused on optimizing net interest income while mitigating potential risks from interest rate fluctuations. To manage this risk, the company aims to maintain similar time horizons for maturing or repricing assets and liabilities, thereby minimizing the impact of market interest rate changes. The company's financial summary reveals that it has engaged in 2 key shareholder return initiatives. Firstly, the company has a history of paying dividends to its equity securities holders, as explicitly stated on pages 2 and 56 of the report. Secondly, the company has also bought back shares from the market, with evidence found on pages 71 and 72, indicating that it has repurchased common stock. That concludes the financial summary for Enterprise Financial Services CORP. Feel free to comment below, and I will be happy to answer them when possible.